Hello everyone, welcome to the channel. So yesterday we saw our discussion working out perfectly today. If you had not watched the trade recap video, like how we took the trade, I suggest you to please go once and watch that video. It will give you confidence on the way we are taking the trades, the way we are entering into trades, what is our SL, how is our target defined, everything would be discussed there. So that will also give you a clarity as to what and how you can plan your trades properly as well. So this trade worked out perfectly for us in today's favor. So I am deleting this supply, and since this demand is broken with a closure, I am deleting this demand also. So what does that leave us? We have this level of price action for today, right? So in this price action is what is going to be our focus for tomorrow as well. We see there is one extreme supply which is left open by market as part of today's session. If I include the wicks, it is still here, okay? And there is one more supply which is left out open out here. There are two supplies on the upside which is left open, and there is two demands. There is one demand out here also which is yet to be tested by the market. So there are two demands which is left open in the downside. So keeping the discussion very simple, see, if market opens flat, okay, and if it goes up, let it go up till this supply, let it go. In this supply, if we get negative reaction, I'm interested to take the market down. Simple. If I get the same negative reaction not from this supply but from this supply, I'm interested to take the market again down only. I'm not interested to buy a call till this point or till this point. I'm not interested to buy call, but rather I'll be monitoring how we are getting negative reaction or positive reaction from the supply. This is for the upside. Okay, if we get flat opening and if market comes down, let it come down. And if we get positive reaction from this particular demand, I'm interested to take the market higher. Simple. Negative reaction from these two supplies or positive reaction from these two demands. Why we are doing this? Because from a higher perspective, if you see in 4 hours, if I just refresh this, market is in consolidation. Okay, it's very clear. We got a breakup structure in 4 hours, but ever since then, market is in big consolidation phase. It has not broken this higher range and given a closure yet. Neither it has broken this lower range and given a closure yet. So market is going in a highly consolidation phase. But if I go in 1 hour and see, market is slightly in a negative trend. Okay, there is no doubt about that. So since we are bullish in 4 hours and in daily perspective and also in weekly perspective, we are in bullish. Our primary focus is to take the market higher. But regardless of being bullish, there are chances for market to come down and mitigate these supplies or these demands on the downward direction which are left open by the market before going in the appropriate bullish direction. That is what is our primary focus. Okay, so just to summarize, always keep this point in your mind, like we should not blindly trade in the market. We should enter call only from a demand, okay, and we should enter put only from a supply. This is what should be always your primary focus. Never chase the market. Like today, if you had just waited patiently, or if you had hurried into the market thinking that okay, this has gone up, okay, it might go till the supply, and you would have entered call, you would have faced loss only because of this move. Had you waited patiently and let market tell you what it wants to do, you go along with the market. That's all I was saying. Never ever chase the market. Also, one more thing is, tomorrow is expiry. I'm saying this in all expiries. Make sure you reduce your quantity or keep your capital as small as possible for tomorrow. That will make sure that you don't have much losses being incurred for tomorrow. We need our capital to be preserved no matter what. Okay, so make sure that you reduce your quantity size for tomorrow, or you trade in the next expiry to be very safe, on the very safe side. If market ranges between these two ranges, this also I will just add. So I'll just add a parallel channel here. If market stays in this range for almost like first half of the session, like if I say till here, if market stays till here in this particular range itself without giving any closures above this or any closures below this, if it stays between this range till 12 o'clock or 1 o'clock, let it stay. After that, if we get a closure above this range or closure below this range, there will be a one-sided fast movement. That also I'm just adding it. So this is because of the reason that see, if big players have entered, have shorted call here. Okay, they have shorted the call, and if market opens flat, they would be happy to add on further positions because market will be in a range bound. And when the market is in range bound, big players obviously will have profit because of the decay which is happening in the premiums. If the market is in range bound, it will hardly move. For any small retracement also, you will have a few huge loss or huge decay in your premiums, right? That is where the big players will have their profits on, so they will be happy. So what is the ideal scenario is it should have a fast moment either to the upside or to the downside. Let it have a fast moment, let it go in one direction. You don't have to chase the market. Let market settle down. If we have our plans being executed properly, then we will trade. If we don't get a setup properly, we will not trade tomorrow. Simple as that. I have a course specifically designed for you which make you understand all the concepts in market structures, liquidity, how to trade reversals, how to trade continuations. All that will be covered in this course from a beginner to advanced level. So if you're interested to buying this course, let me know. Thank you so much. We'll meet in the next educational video.